In this week's currency update, the Aussie dollar has remained under pressure on foreign exchange markets, hitting a 3-month low last night of 71.75. Now, there's been a long list of factors that have driven the Aussie dollar lower over the last 4 weeks, from highs above 78 cents mid-May. These include softer China data, weaker commodity prices, iron ore below $55 last night. Domestically, the surprisingly soft Q1 CPI outcome, the surprise RBA rate cut, and the prospects of another rate cut as soon as August have all continued to weigh on the Australian dollar. Now, despite the RBA minutes from the May meeting, which were released earlier this week, suggesting a lack of urgency about rate cuts and a better than expected employment outcome, with the unemployment rate remaining at 5.7%, the Aussie dollar failed to pull out of its 4-week nosedive. So the new factor that has weighed on the Australian dollar through this week has been what's felt like a rising chorus of Fed speakers suggesting that June was a live policy meeting. This culminated in the release of the April minutes earlier this week, which suggested that a rate hike in June was likely if incoming data was consistent with Fed forecasts. That means that upcoming data through the end of this month and early next month will be critical for the outcome of the June 14-15 meeting. Those factors have all driven the US dollar higher this week, and that's left the Aussie dollar under pressure. In the meantime, this course of Fed speak will continue through next week, with Janet Yellen due to speak Friday and again on June 6, ahead of that key Fed meeting. Domestically, RBA Governor Stevens is due to speak Tuesday at a forum here in Sydney, and mid-next week we start to get partials for Q1 GDP, including construction work done on Wednesday and CapEx data on Thursday. Now, I'd expect the Australian dollar to remain under pressure next week, but we must remember we've come a long way in a very short period of time. The Aussie dollar is down about 6.5% against a trade-weighted basket of currencies, and I'd expect to see lows being limited to low 71 cents through next week. These are all factors we can talk about in next week's currency update.